Another trading day right here in Lagos, Nigeria, 10 a.m. and definitely we know the trades are about to start or starting right now. But let's get to the top stories that set your agenda, starting with what's playing out in the oil market. We're seeing prices little change today with the U.S. tariffs and Russia-Ukraine ceasefire talks. That's offset concerns in the Middle East, and that's put away concerns about supply, that's oil supply in the global market. We see prices for Brent there up about 10 cents, 0.14%, $71.17 a barrel, while U.S. WTI crude futures, that's up 7 cents to $67.65 a barrel. Will WTI match back up above that $70 psychological level? We'll definitely find out at some point. To some other news now. 6 years after its initial agreement, Nigeria and Brazil have officially signed the commercial phase of the $1.1 billion Green Imperative Project, as a GIP, marking a significant step towards enhancing food security and agricultural productivity in Nigeria. Speaking at the signing ceremony of the deal at the presidential villa, Abuja, Vice President Kashim Shettima said the project aligns with President Bola Tinubu's administration's commitment to economic growth, policy continuity, and private sector-driven agricultural development. GIP is the largest agricultural project in Africa, which prioritizes the development of sustainable, low-carbon agriculture, aims to develop structural conditions to boost food production in Nigeria in an efficient and competitive manner. To the stock market now. Let's see how your money performed yesterday. The first trading day of the week, that kicked off in the red, profit taking 0.15%, and the all-share index still below that 106,000 level. Activity trading 477 million units of stocks valued at 7.05 billion naira. That was what was traded yesterday. Top gainers, we see Academy Press 2 naira 88 kobo, up 9.92%. Nimeth, that's in pharmaceuticals, up 2 naira 70 kobo, 8.43%. And we also see Tantalizer on the gainers chart again. To the top losers, eTransact down a big 10% yesterday to start the week. Top trades, Jais Bank, Zenith Bank, and Sovereign Insurance. But what's going to happen today? We'll see some kind of recovery or cherry picking. Maybe that might happen. We'll see. Meanwhile, the Nigerian Exchange Limited, they've announced the listing of 2 new futures contracts, NGX 30 U5 and NGX Pensions U5, as part of efforts to expand the derivatives market and enhance liquidity. In a market bulletin released yesterday, the NGX confirmed the newly listed contracts tied to the NGX 30 index and NGX Pension Index, with an expiration date set for September 19, 2025. According to the bulletin signed by Dot Time, Iwenehai, head of issuer regulation at NGX, trading licenses holders and the investing public are hereby notified that the NGX 30 U5, NGX Pension U5 futures contracts were listed on the NGX yesterday. So investors, you need to go and research that one and find out if it's something you want to buy. All right, to some company news now. Tariff, a key player in the Nigerian automobile industry, has announced the addition of Joylong compressed natural gas CNG-powered buses to its vehicles brand portfolio in Lagos. Briefing journalists at the company's sales office at Awoyaya in the Lekki area of the state, the general manager, marketing and corporate communications, Abiono Babarinde, says the development is to create viable solutions for fleets and individual customers and enable them reduce costs associated with their logistics expenditure. Take a listen.
Leading indigenous automobile company Tariff Motors PLC is unveiling the Joylong compressed natural gas buses into the Nigerian market. The launch begins with a briefing by the General Manager, Marketing and Corporate Communication of the company, Abiono Babarinde.
Tariff Motors is proud to announce the addition of Joylong compressed natural gas, which we all popularly know as CNG buses, to its vehicle brand portfolio. The rationale for this latest addition is to create viable ownership solutions for fleet and individual customers, both in the public and private sectors respectively.
Next is the symbolic cutting of the tape to officially unveil the buses.
To the glory of God.
These factory-built Joy Long buses comes with a 2.7-liter engine, which has dual fueling capacity and can conveniently switch from premium motor spirit to CNG. The auto giant says these compressed natural gas-powered buses are a game-changer for vehicle users in Nigeria with lots of benefits.
Our target is okay to government, for government to also, use this as a kind of palliative, to ameliorate the cost of transportation. Then we also look at transport companies, to see how the cost of transport fare can go down drastically with the introduction of CNG buses.
The CNG-powered Joy Long brand of buses is brought in by the company to ease logistics bottlenecks for individuals and organizations and comes with a warranty.
For 2 years, anything that happened to the vehicle is on us. We are the one that will replace it for you. You are not the one to pay anything. That's what we call warranty. That's why Koshari is there. Anywhere you can go and see Koshari's edition working on the CNG for you.
Mr. Babarinde says that as a leader in the Nigerian automobile market, Koshari's Motors PLC is focused on satisfying the yearnings of its customers.
In even the private sector of schools, hospitals, you can just banks and what have you that uses these buses. So these are the opportunities that we have also created using the gas option as something that they will also enjoy in the market.
The auto giant says it currently has 18 seaters plus one driver space of the brand in the country, but would later hit the Nigerian market with other seating capacity buses.
All right, so we had that inflation numbers for February. It's all about inflation reporting now for major economies, and Nigeria is not left out. We have 23.18% for February, down from 24.48% in January, and that's according to the National Bureau of Statistics. And these are the that's after the base year, as the rebasement. Now we have this new figure. So the latest number shows 1.30% decrease. That's 3.0 in the headline inflation rate compared to the previous month. So definitely a lot to unpack there, because we've heard a lot about these rebase numbers and how much our inflation has dropped ever since then. But are we feeling it when we go to the stores? That's definitely the big question there. And to help us unpack this, we have our very own Mr. Bismarck Urani, the CEO of Financial Derivatives Company, joining me right here in the studio. It's great to have you, sir.
Yeah, good morning. Nice to be here.
Yes, and definitely it's all about inflation.
Inflation.
I'm just wondering if a time will come when we'll stop talking so much about inflation. There was a time that it was okay. It wasn't always in the news.
Okay, let me try and break it down. You see, there's what you call a natural rate of inflation.
Right.
When inflation is within a particular range and doesn't disturb anybody. There's what we call hyperinflation, or what we call spiraling inflation, runaway inflation, and all of that. Depends on what stage and how it's changing. You will not talk about it if it's stable, right? And if it's not far away from the natural rate of inflation. But you will talk about it when there's volatility, and then people begin to price themselves. What do? They price their wages against it. They price their goods against it. Even your wife will ask for money based on it. And your children will talk about it. Schools will. So everything is based on pricing. And so that measurement of the change in price rate, price level, which is called inflation, or in some cases disinflation when it's coming down, or deflation when it's actually dropping sharply. What we've seen today or yesterday was new methodology and new rates. But what is constant is that even if you use the old methodology, which it came down from 33 to 32, or you use the new methodology where it came down from 24 to 23.18, the trend is that its prices are declining. Then you ask yourself the fundamental question: is this price change transient, or is it structural? if it is transient, it means that seasonality and other things play, and then it will come back again. If it is structural, it means that there's some more work to be done to remove the structural rigidities that. So what has happened is that core inflation actually increased, which means that there are structural factors that still need to be dealt with. Transient factors like seasonality, harvest, Hajj, and all of those things are playing into it, or exchange rate movements. So 1% drop in inflation, not a big deal. So, but if you look at it and say, okay, we brought inflation down from 33 to 24, it gives you the impression that you're doing something fantastic. No, you have to compare likes with likes. So as far as we're concerned, there's a 1% drop. But a 1% drop in inflation is moving in the right direction, is good. Now what's going to happen next? And how does this reflect in other factors, right? So that is where the unions are going to be asking for something. Well, minimum wage are going to be asking. The people in the markets are going to be, the people trading in the foreign exchange market, people trading in on the stock exchange will say, because inflation declined, and you were saying today, we think that the stock market will be positive, because if inflation declines, the conventional logic means that the central bank will, in May, bring down the MPR, or at least stay constant, which means that there's an attraction to buy equities. So I would not be surprised today I will see the equities actually beginning to improve and all of that. So I think that's the most important thing.
Right, and definitely, you know, when you remember that trending issue about the copper complaining about, yes, rising cost and all of that, so there's obviously that dissatisfaction.
There are two variables there. One is rising cost. The other one is that the National Youth Service, I understand, have not paid the new minimum wage, which is 10% above the minimum wage. So the coppers are supposed to be getting 77,000. If it is true that they're actually getting 33,000, there's a big gap there of 40,000. So the pain point could be, pay me my new minimum wage, youth corps, but also do something about price level. So those could be the thing, and it cannot be ignored. Maybe she's coming out to say it, but others who are not saying it have grumbling in, somewhere.
Right, and definitely looking at this trend that's building right now, it's a silver lining. If you look at it. So what should the government be doing now to actually help fast track this, and we can actually feel it when we get to the stores?
No, you see, you got to differentiate between structural issues and transient issues. The transient issues will disappear. So there's nothing you can do about that. If once, for example, pawpaw is in season or tomatoes in season, the price comes down. Once it's out of season and it's planting, it goes back up. But if for any reason the road network gets bad, if for any reason the price of diesel or petrol was to increase, then it has a knock-on effect on the price of goods. That is more structural. So if you want to deal with aggregate factors and say, okay, now let's get the diesel down to 1,000. It affects the cost of calls in base stations, it affects the cost of transportation, it affects the cost of using your generators and all of that. That's more structural. When we see that begin to happen, then we now know that, yes, this is happening. Another factor we've seen is wage restraint. That is, people are not buying because they don't have the money to buy. That's pretty fundamental. So one, either they increase their productivity to ask for more wages, or to cut back on their consumption. All of those have an effect. But again, it's interesting that we've seen inflation go in one direction for such a long time. The fact that we could see a point of inflection and take a breather means that everybody has to take a look at it. And the government of federal government of Nigeria, state governments have to now look at their spending, the money supply growth, the leakages in the system, and to some extent some profligacy. We need to bring all of these things together, and we'll see that this trend can be sustained. If not, if it turns around, it could turn around with a vengeance. But one thing you must notice that there's a correlation between this and the exchange rate. We've seen this trend of disinflation, and it coincides with the exchange rate appreciating. But the exchange rate for about 3, 4, 5 weeks has appreciated. Now it has stopped and it started going back up, but not too far away, because the exchange rate is closer to equilibrium than it was before. So we do not expect volatile moves, right? But it is something that people have to keep in view. that if the exchange rate is depreciating, it passes through to domestic prices. If the exchange rate is appreciating, it should technically pass through to domestic prices. But you know, the thing about this market is that what we're seeing, Dangote is selling, the recommended retail price of petrol today is 815. But as we speak, they're still selling at 860, making about a 40 naira spread on you know, actually benefiting from the injustices of the system. The middlemen and the retailers are doing that. That has to stop, right? How do you can't police it, but the only way is that those guys who are, if the price is 815 naira, there's no reason why MRS, NNPC, and everybody should not be selling at 815 naira.
Right.
They can't be gouging the people.
Right.
If the price went up, they would automatically increase it.
Yes.
Now that it's come down,
it's always sticky to the upside,
so
you know, in this part.
That's the problem.
And we also see oil marketers under Petron, they're calling for regulation, mandating fuel prices be adjusted only every 6 months. Right. And it seems, you know, the marketers seem to be feeling the heat here.
Yeah, that's the, you see, when it comes to you see, they are marketers, they are speculators. Right. Everybody, you know, there are middlemen who have actually become parasites of the system. They need to understand that prices move in every direction and that you are only carrying your inventory. Right? The price of your inventory is such that you have to adjust every now and again. Sometimes you make some money, at times you lose some money, but in the final analysis, you make money, but it's a high volume, thin margin product. It's not for quick kills.
And they did announce some of the losses they've been making.
No, but when they make profits, they didn't announce the profits.
No.
No,
okay.
So I mean, that's selective inattention. It's not doesn't play out with me. But one thing though is that we are looking at 3 variables. One, the price of oil and Brent has gone up slightly, but that's fine for us. But cocoa has dropped below $8,000, now $7,800, and LNG has also dropped by 0.85%. So if you are taking 3 variables that contribute to our balance of trade and the strength of our naira, we've seen that cocoa has come down, LNG has come down, even though combined they're not as much as oil, and oil has gone up just marginally, but still way $4 below our benchmark price. So there's a lot of work to be done in terms of managing the economy so that we can have macroeconomic stability.
Right.
But also the other thing is to manage expectations, because what we see in Nigeria as an economist is a crisis of false expectation. People just think that, one, they are not participants in the economy. As a consumer, you're a participant. That your role, what we call the function, the consumption function and savings function, plays a significant part in macroeconomic stability. So don't have false expectations. Do what you have to do, and that what goes up will come down.
Right. Hopefully. When it goes up, it comes down. But, you know, we'll continue this conversation in a moment. We'll just take a quick pause now, and we'll find out what to do, you know, when it comes to expectations, what's playing out in the commodities market. That's the moment. Do stay with us. Welcome back. You're still watching Business Morning, and we're right here at our studios, the trading floor of the NGX. I still have Mr. Bismarck Rwani. We're unpacking the inflation numbers and talking about expectations. You know, Mr. Rwani, definitely is a negative when you always expect that prices will go up. Yeah. You know, definitely. So, looking at what's playing out so far, we know the CBN, they're going to be meeting sometime in May, and they've had about 2. There's going to be another one in March and another one in April. So with all of this data we're seeing, what's the next decision for this MPC?
Well, it's difficult to say. I can't, you know, it's like asking me whether it's going to rain tomorrow.
Right.
You know, but the reality is that if the trend continues, right, the likelihood is that you don't just cut rates, you hold first and see the effect. But if the rate is consistently declining, but even at a slower pace, you may decide to buy the bull, you know, take the bull by the horns. But one other variable that they're going to be watching is the exchange rate. We think that the exchange rate is playing within the the trading range of 1550 to 1600. I don't think it's going to run away. If that exchange rate stays stable, if the price of diesel and petrol begins to decline, it is possible that there'll be comfort in saying, okay, let's bring down interest rates so that there'll be increased investment, stock market will rally. And the Financial Times has an article today that Nigeria is one of the markets now that investors are flocking into because of the tariff war, because Nigeria seems to be insulated from the tariff effect, right? And that, for the Financial Times to say that, it's quite significant. So one, short-term investors, portfolio investors are coming in. Two, we are seeing a trend towards disinflation. We are seeing stability and appreciation of the exchange rate. And generally speaking, if that is the case, and it is consistent, then we might be heading somewhere positive. However, the thing about this whole thing is that we have what they call reform fatigue. 2 years after reform, you normally run into the fatigue. When the fatigue is there and the pressure is building from special interest groups, then you begin to see the risk of ideological backsliding, where you now begin to go back on the reforms because you are afraid, for political reasons, not to move forward. So that's where we are. So if the price war between NNPC and Dangote was to end abruptly, and the price of petrol was to stay where it is, if the exchange rate was to move negatively again, and if certain things interventions take place, we might have an abrupt stop to this positive move. But I don't think so. I think that rather than having an abrupt stop, you are going to have some slowdown, right? And Nigerians will absorb it. But it is how to translate this thing into the welfare of the people. That is where the problem is. How do you get it across? Because at the end of the day, it's about the welfare of the people. It's nothing else. It's not about happy people, happy statistics and unhappy people. No, it is about getting the people to feel the effect and feel better. So if you wake up and say, this week that is starting, right, I think it's going to be better than last week, then the economy is working. But if you are afraid that this week that is coming is going to be worse because of traffic congestion and all of that, then the economy is not working.
Right.
That is the true test. How you feel and how you think the future is holding, what the future holds out for you.
Right, so let's aim for happy data and happy people.
Yes, that's what.
Thank you so much. Always great to have your perspective.
Happy birthday, Daddy.
Thank you so much. Yes, it's another birthday again, and yeah, definitely hoping that the data gets better. Yeah. As the age, goes up.
Happy birthday, happy data.
Happy data, people, happy people. Thank you so much, sir. Always great having you.
All right.
All right, we'll take a break now. When we come back, we're going to review what's been playing out. That's in the capital markets. That's a moment to stay with us. Welcome back. Well, as the first quarter of 2025 is winding down right now, let's get a review of what's played out in Nigeria's capital markets so far. Key trends that will shape the remaining quarters in 2025. We're going to find out what to expect. And joining us for that, we have Mr. Haruna Jallo Waziri, is the MD CEO, Central Securities Clearing System, PLC. Joining me right here at the studio. It's great to have you, sir. It's been a while.
I know. It's always a pleasure to be here. But I'm glad that you're back on our floor.
Oh, yeah, we're back on the floor. Full time.
Excellent.
And, talking about the floor, a lot has played out already. And I'm wondering if you also feel this year is running really fast. Q1 is almost over. And I remember we were just saying Happy New Year a couple of days ago. How are you seeing the speed?
So when there is a lot of activity, sometimes time passes very quickly, and that's what we're seeing in our market. Essentially, the interest is significant. The amount of, if you like, order flow we're seeing, both domestic and international, has increased significantly compared to last year. Year on year, we've seen an increase in 37.5% or thereabout of our index growth last year. This year, we're seeing some momentum. Average trade is about 11-12 billion. compared to Q1 of last year. And typically we start very slow in the quarter because budgets have to be approved, within either prop books or otherwise. Even the government, direction has to be properly defined for people to begin to come in. But we've seen some speed in terms of decision making to continue to trade in this market, and we've just begun to see some growth. Yeah.
Right, and talking about the first quarter now, what key trends have you seen play out in this quarter in the market?
So what we're seeing most importantly is that there's a rebalancing of portfolios by international investors looking at Nigeria as a destination, because they're seeing, first of all, the reforms that are continuously happening. We've seen, subsidies that have gone, stabilization of the currency by extension. I think Bismarck had mentioned that earlier, that if the currency stays within the band of 1,500 and 600, where it doesn't see a runaway, then people tend to plan with that particular number. And for them, what they want is stability. And because that stability has begun to creep in, and we're seeing consistency in terms of the reforms and also the activities that go around the reforms. So we're hopeful, and when they balance those books, it tends to come to Nigeria.
Right, and talking about international investors, there was a time it was mostly, or I think that might still be happening, where it's just domestic, investors playing in the market. Some fund managers, I've spoken to, they've said Naira assets are looking very attractive, right now. Do you share that sentiment?
Absolutely. If you take $1 and come into Nigeria, I mean, the value you get for it is significant compared to if you say you take it to other emerging markets like Qatar, and all of those places. So they're seeing our assets cheaper than everywhere else. And if you look at our earnings per share, it comparative to other markets, is quite significant. And so there's significant value in Nigeria. What they were afraid of was the currency stability. And as you begin to see that, then you start seeing them plan Nigeria as part of their portfolio, certainly.
Right, and I'm sure you see the inflation numbers.
Yeah, it's
for
interesting.
February.
Absolutely, and I think we're looking forward to that because cost of living is quite high in Nigeria. I mean, comparatively to 2 years ago, and it's burning into people's pockets. And once you have a higher cost of living, then consumers tend to spend less and then tend to not save more. And once you don't have savings, you don't see it transfer into markets. And we're glad that it's happening, and I think it's a good thing, if you ask me.
Right. So Q1, that's winding down. Q2, I'm sure, investors will be wondering what next, at this point. What are you seeing?
I'm excited around what's going to happen in Q2, especially when prices begin to come down. Especially when the currency stabilizes, especially when policies are defined and are very clear, and we know that they're going to be achieved or done. And that helps for planning within the context of the listed companies who are actually in Nigeria and producing, whether it's services or goods or otherwise. And if that happens, then you begin to see it interpret into those companies, and by extension you're seeing more profitability. The banking sector is running away from everybody because of what they're doing in terms of performances. And then if you add telcos and fintechs and consumer manufacturing, when you aggregate everything, it looks like it's going to be a good year. And investors tend to forecast what will happen in companies, so they price it today for tomorrow's value. And certainly next quarter you're going to see a lot of that.
Right. And how is the CSCS positioning for what's coming?
So, funny enough, CSCS has always positioned ahead of what is happening. So, for example, one of the key things we're talking about is now accelerated settlement. And we had a call with the DG yesterday who gave his go-ahead to say, okay, we're at T+3. Should we move to T+1, which is where markets are? And, I keep giving this example everywhere I get an opportunity. I'm sure my son is very angry with me right now. He says that I don't want to participate in your market because I buy an asset, I wait 3 days before I get it. I sell it, I wait 3 days before I get my cash. So 6 days, if I go to Amazon, in the morning I buy an asset, or rather I buy some goods, I get it in the afternoon. If I don't like it, I return it. My money comes back. So why can't you do that? So I think that's significant for us from a heavy lift, and preparing accelerated settlement, which means there will be, more order flow, there will be liquidity in the market more than we think. And all of that is driven by us and the regulator as well. And from a technology perspective, we've just launched our second version of what we call the Reg Connect. That's our connectivity between the registrars and ourselves in terms of the daily reconciliation that we do. That version is work, I kid you not, and I'm sure the registrars will tell you about it. So again, the APIs we built were connecting more people. The brokers are, instead of using the portal, they're now doing an STP through us, which means better efficiency. And I always say that in the morning the spreads in the market are wide, but then they confluence towards the afternoon, and that's why you see liquidity anytime after 12 o'clock. Now imagine if you have those APIs, so all of the paperwork is not being done, right? It's being done automated. What you see eventually will be shrinking in the morning because they don't do much, and which means you're likely to see more liquidity.
Because it's quite interesting. You would mention that T+3, bringing it down to T+1, because I've heard some young investors that get quite frustrated with that. Absolutely. Because when you make a trade or you make a sell and you're trying to get into another asset, you have to wait 3 days before you can put that fund, and that's why I guess the crypto exchanges are quite attractive to them, because they can get settlements like that. So do you have a time frame where we can actually get?
So we're looking at 6 months maximum. In my mind, once we put all the things together, we should be able to do it in 6 months. And the DG is very, very clear about that. Let's go ahead and do it. Left to me, you know what, we'll go T+0. But again, there are consequences of that from the custodians, from the brokers, in terms of how they will rejig their systems. But why not? I think we should think about atomic settlement, because that's what people are thinking about. The technology is there, the know-how is there. It's just for us to just move those elephants around us to get to where we want to be. Yeah. All
right. So definitely, we're still aiming for that $1 trillion economy, and we've heard experts say, come to the capital market, come and raise funds. The market is deep enough. But what's being done, at this point to contribute to this $1 trillion economy we're aiming for?
So in my mind, policy making and consistency of it is very important. Capital is shy if it doesn't like what's happening. So it's like water. When you throw it, it goes to the lowest point. Capital will find the lowest point of resistance and then perform. And if we provide that particular low point, which are a couple of things, like I always say, ease of doing business is number one. Policies that are consistent. The environment where you have skilled workers who would help pursue the objective of those entrepreneurs. And of course, unlock that capital as much as is possible, whether it is from the banking side or from, international investors, or even personal angel investors and all of that, or even PE funds who will be interested in Nigeria. But guess what? One of the things we're doing also from a CSS perspective in our little corner is that, we're hosting the African Middle East Depository Association conference for the first time in Nigeria next month. So it's, I think, June 23rd, 24th, and 25th of next month. We're bringing in the whole world to take a look at Nigeria. And AMIDA is Middle East and Depository in Africa, and they come with a lot of other, what I call ecosystems that come to Nigeria. Nigeria is good for that. That's what part we're doing at CSCS. That conference will have everybody in the world, from people from Mexico to what's it called, Russia. In fact, the Russians are coming, surprisingly, and across. The ESA board is also going to be here, which is the International Security Service Association. Now, what we're doing is showcasing Nigeria to say, look, guys, we're ready to move forward. This is what's happening, and that should help also from our own little corner to do it. But more importantly, I think, ease of doing business, consistent policy, a stable currency, and if we see inflation taper down completely, we'll be on the way.
Right, and talking about AMIDA, that's Africa Middle East Depositories Association. First time that's going to be hosted in Nigeria. You did say the Russians are coming, and major stakeholders. And we keep talking about integrating the markets in Africa and all of that. And you as an investor in Nigeria, you can buy a stock in Ghana and all of that. I know that's also the works. But how is the CSCS playing into all of that?
So I sit on the board of AMIDA as the vice chairman. The chairman is a Bahraini guy called Abdullah. One of the things that, as part of our initiative, is to see how we can integrate ourselves within even Africa, within the Middle East and Africa connectivity. But more importantly is the CSDs, which is what we are, tend to have a better collaboration than the exchanges, because the exchanges compete. We don't. And that's why it's easier for us to do it. And it translates to what we're doing at WACMIC, which is the West Africa Capital Market Integration Council, where we're actively involved in trying to integrate. Now, the key issue that we have in integrating in Africa, West Africa, is around currency exchangeability. All right, so if you go to Ghana, it's a cedi. If you go to Nigeria is a naira. If you want to cross-reference Ghana's CD and Nigeria, you have to go to dollar, go to CD, or CD, dollar to Nigeria. If we're able to remove some of those, if you like, barriers, it's easier for us to actually integrate. Is work being done? Yes, it is. Is ECOWAS really pushing it from a council perspective, especially the central banks? Yes, they are. But the political will has to be increased significantly to see how we can remove those barriers for us to be able to do.
And talking about barriers right now, we know the trade war, the tariff wars, that's happening out there in the global market. And today a tariff comes on, next thing it goes off. Next it is paused. How is all of this your expectation, when it plays into the Nigerian's capital market? Are you seeing any risk there?
So for me, I hope Trump is not listening so that doesn't cancel my visa. I think it's madness to start a trade war. The only losers are actually the consumers across any nation. It doesn't help anybody. It doesn't help global economy. But good enough, we are, if you like, for now, we're not part of that particular, if you like, madness. Let me choose my words properly. Nigeria is not part of it, and because we're not affected, it should not have any effect in the economy. If anything else, it should be advantageous for people to say, okay, you know what, maybe I should go and start manufacturing in Nigeria and then export it to the markets that are fighting. In some way or form, I think it might be good for Nigeria. I don't know whether it's short to medium term, but I think in the medium term, if it continues, we will likely see other people coming into markets like ours to begin to, avoid the tariff wars that are currently going on.
Right, definitely. We don't really need, tariff wars.
We don't need any tariff wars.
At this
point.
As
we are today, we don't need it, and we should avoid it as much as possible.
Yeah, because at the end of the day, we know the fears of the U.S. Fed, the fears of most of the central bankers now still trying to keep inflation globally moderate, and we're now seeing projections for the global economy. The latest one, we're seeing a deceleration there from expectations, I think from 3.1% to about 3.0%. That's for the global economy. They've also downgraded the growth expectations for the U.S. So with all of that, that definitely trickles down into emerging economies. So what are you seeing, going forward in 2025 for the Nigerian economy and the capital market here?
So China is key. China is seeing consumers stop spending, and so they are trying to accelerate, certain policies to bring back consumers into spending, because the fear is that they're likely to go into a deflation because of what's happening, and that's not good for the economy. And the exports, the investments, tend to have those significant impacts, according to us. But for Nigeria, to be honest, like I said earlier on, what is very important is for us internally to continue those reforms and continue them in a disciplined way. And more importantly, as we begin to do expenditure, the right expenditures are important. We should be very disciplined about revenues when they come in, than to, especially if oil prices go up, which we don't think will in the near future because of the trade wars that are going on. But I'm hopeful again, like I said, and it's about being disciplined and watching our expenditure and putting it in the right places. And I'm hoping that both the central bank governor and the Minister of Finance will keep doing what they're doing.
Right. And talking about putting money in the right place, I don't know if you saw that data about what Nigerian men spent when it comes to 2024. We're hoping that money, finds its way to the capital market. I'm sure you know what I'm talking about, but that's a discussion for another day. Definitely.
I agree with you. I don't know where that source of data is.
Yes, that data is.
It's interesting to find out how they got that data.
Yes.
But I think the grey economy from that perspective has always been significant. We've always had a grey economy in Nigeria, and I remember when MTN came to Nigeria, there was another South African company, that Vodacom, that wanted to come and buy a license for GSM, and they took a look at our numbers and said that no Nigerian can afford more than 3,000 naira a month, or up to 3,000 naira a month for airtime, and the rest did, and their numbers were wrong, because we have a grey economy that supports the system, which is not being counted. I suspect that's one of them.
Right.
If you go to Lekki and see the number of buildings that are coming out and the people that are buying the property, they're not normal people that have They are part of what we count in our GDP, and that exists. So it's a resilient economy, if you ask me. And,
quite resilient, definitely.
We're going to see more.
All right, well, we're definitely hoping for the very best, going into the rest of 2025. But it was great having your perspective today, Mr. Haruna Jalo-Waziri, MD/CEO, Central Securities Clearing System PLC. Thank you so much for coming on the show today.
Always a pleasure. Thank you.
All right, we'll take a break now. When we come back, we'll find out what's going on in the global economy. John McQuarrie is standing by for that. Do stay with us. Time to find out what's playing out in the global economy, and we have John McQuarrie with all of those details. What's it today? What's going to shape investor sentiment in the global market? You have the floor.
Thank you so much, Laddie. Well, your guess is, I believe, is correct, because we cannot go to the global economy without talking about tariff. That's like the hottest news in town at this time. But good enough, we do have some stories that are not directly connected to tariff, at least at this time. So we'll start from India, where their space economy is poised for a huge jump, with estimates indicating that it could touch $44 billion, but that's by 2033, as per a new report by FICCI. Well, the nation's fast-growing space industry is ready to emerge as a global leader, fueled by technological advancement in satellite launches, space exploration, and private sector participation, with increasing participation of startups and government initiatives. India's space capabilities are poised to catch up with world trends, and the space industry is not only unfolding new horizons in space, but also set to generate thousands of jobs and stimulate economic growth. The prospect of India's space odyssey are brighter than ever. Imagine when Nigeria will talk about its space economy. Wouldn't that be wonderful? Well, let's leave space and come to Earth. Iron ore fell as the latest economic data in China underscored an uneven start to the year for the world's second biggest economy, with new home prices falling again. Features of the steel-making ingredient were near $101 a ton, declining from the highest close this month. China's economic challenges continue to weigh on the iron ore and steel market, despite some signs of short-term demand optimism. China's new home prices fell at a quicker pace in February, worsening for the first time in 6 months, despite government's attempts to boost the sector. This decline may dim investors' hopes that the real estate market is close to bottoming out. Meanwhile, steel output data showed China's mills produced 1.5% less metal at the start of the year than in the same period last year. Beijing says that it plans to push the steel industry to cut output this year without giving more details to deal with overcapacity and restore industry profits. And then to the U.S. Support for Ukraine, we know is in doubt now with the last pronouncement of President Donald Trump. But Kyiv's European allies are weighing whether to seize $300 billion in frozen Russian assets and use the money to compensate Ukraine and support its military, as well as help rebuild shattered homes and towns. For now, the assets are still on ice, with opponents of seizure warning that the move could violate international law and destabilize financial markets. Some of the key things about the debate surrounding the Kremlin assets that were frozen shortly after Russia's full-scale invasion early in 2022. Well, Foreign Secretary David Lammy and the EU's top diplomat Kaja Kallas say they will review innovative initiatives to collectively step up European defense funding and bolster military readiness in a meeting that's supposed to hold in London. And this information is according to the UK Foreign Office. We're still staying with President Donald Trump. President Donald Trump. We know he's supposed to meet with Russian president today, and he says that the U.S. and Russia are already talking about dividing assets as part of a push to end the fighting in Ukraine. The latest sign that he may be preparing to sacrifice Kyiv's interests when he speaks with Vladimir Putin, which is the fear of both the EU and, of course, Ukraine. Well, on one objective of the call is expected to be getting the Russian president to agree to a 30-day ceasefire that President Trump proposed this month. Ukraine has already agreed to that since last week, and Putin has been non-committal so far, saying he accepted the idea in principle, but wants certain conditions to be met. Well, it's not just about finding peace in Ukraine or between Ukraine and Russia. The trade war is still on. And of course, we know who started it. It's President Donald Trump. And so a lot of Americans are expressing fears of inflation and recession. We've spoken to our correspondent, Maria Bird, a couple of times on this. Now, let's speak to an individual who is right there, lives in the United States. He's a professor of Africa Studies at the University of Colorado, Professor Austin Okigbo. Prof, good morning and welcome to the program.
Good morning, Nini, and good morning to Nigerians, your viewers.
Yeah, so I mean, everybody is talking about President Trump. The tariff is there. He did promise the world that he would bring peace between Ukraine and Russia even before he gets into office. Well, he hasn't been able to achieve that, but we see him working towards it. What are the views of you in America about all that President Trump has been doing since he was inaugurated in January?
Well, it's been, I'm sorry to say, it's been a bit of chaotic because we're just sloshing from one policy to the other, foreign and domestic. I'm hoping and hopeful that some of these will eventually cool down when reason begins to guide some of these policy issues. I think he's beginning to also get his hand around some of the issues because you cannot run a country in this manner, as chaotic as it is. Neither can you have positive impact on the global scene, especially for a country like the United States, who, when they sneeze, the rest of the world catch the cold. I think it's important that he gets it right. I don't know what is going to happen in the next couple of weeks. I'm just hopeful that reason will eventually prevail.
So this fear of inflation, recession in the U.S. following, all of the tariff and, some of those supplies that the American people depend on for daily living either may not come in or may come in at greater costs. How close or how real is this fear of inflation or recession from the eyes of, an American person living in the country?
Well, the problem is that, I don't think in his thinking policy-wise, when he talks about tariff, he understands the logic of it all. If you look at economic history and go back to the antecedents, to the things that precipitated, that led eventually to the Great Depression, about almost 100 years ago, this is exactly part of what happened. You don't play with global economics and trade in that manner. Especially, United States has been the driving force in the global order that we have now and have benefited mostly from it. The logic of tariff is that he likes to make believe that the countries on whom he imposed the tariffs are the ones paying for it. But actually, it's the American consumer that is paying for it. America is a consumer-based economy. And in a consumer-based economy, so that means the economy is driven by consumption. So at the end of the day, it's not the corporate America, it's not even China or Canada or Mexico or any of these countries or EU upon whom he is imposing the tariffs. It's the American consumer that pays for it, and it's already translating. And we are seeing how even those who voted for him are beginning to express concerns and even sentiments and regrets that they are eventually not getting the benefit of what they voted for. So it's translating negatively. And I'm hoping, again, that reason will prevail in the long run.
But perhaps he's trying to, I mean, they say reforms are always harsh, even here in Nigeria. And now they say we're counting some gains of the reform. Perhaps he's trying to change the taste board and demand of the American people to look inwards instead of looking, you know, at some of these imported goods and services. Perhaps that's his objective, because he says it's America first.
That's one of those illogicalities and fallacies that anybody can talk about. How do you change people's taste bud in that manner? A lot of the productions, by the way, we're talking about here are American corporations also operating from overseas and bringing their products in. That's part of the whole agenda of the world trade system and a free market economy that America engineered, when you think about it. So how are you going to change the taste bud? Let me give you an example. The devices we use here, laptops, cell phones, they are like iPhone is being manufactured. They are American corporations like Apple. And where are they manufacturing them? They are manufacturing them in China. And when you bring it back into the United States, it's still American corporation, American product, though manufactured in China. So if you impose tariffs on them, a piece of device will cost more than normal. So I don't understand this whole idea of American taste bud. What does that really mean? I mean, we operate and live in an entangled global economy. How do you really change the American taste bud? What does that really mean? I mean, sometimes some of these terminologies being thrown out there sound stupid to me.
All right, Professor Austin Okigwe, Professor of Africa Studies at the University of Colorado in the United States. Thank you so much for your time this morning.
You're welcome, Nene.
And just before we go, still in the U.S., Starbucks has been ordered to pay $50 million to a customer who was burned when hot tea spilled on his lap at a California drive-thru. Lawyers for Michael Garcia said the server who handed him 3 supersized drinks in February 2020 did not push one of them into the cardboard cup holder properly. And so you have $50 million. I wonder if that will go through or there will be an appeal. Well, it's America. If it was Nigeria, I'm sure this would not even get to the courts. But anyway, that's what I've been able to gather for you for the global news. I wonder if Ladi can hear me. Ladi?
Yeah, thank you so much for bringing us up to speed with what's happening in the global economy. There's still that talk of tariffs. We'll definitely see how investors, play into what's happening there. Maybe some of these tariffs could get a pause. But thank you so much for the update there on the global economy. I'm still right here at the trading floor of the NGX, and we're still seeing some positive sentiment, and the market trading is on right now. Just a marginal gain, about 0.04%. We'll see if that continues into the intraday trade right here. But we'll give you details in what's playing out with most of those markets that we track. That's at 1 p.m. on Business Incorporated. Thank you for watching Business Morning. I'm Ladi Williams from the team right here. It's bye for now.
Fly better.